Welcome to the April 19th, 2021 Advanced Report for McGowanGroup clients and NetWorthRadio.com listeners. I am Spencer McGowan, your financial weatherman with your fast-paced tour of the global financial markets. I'm also president, McGowanGroup Asset Management, a team of 9 dedicated professionals serving you. And this is one of the ways that we serve you with this weekly financial briefing, taking both of our levels of decision making to the next ability for profit and for doing the right thing at the right time, which leads to this graph. The headline that you're going to see this week, we always take the headlines and then turn it into investment strategy and even lessons. The headline's going to read, the Dow hit 34,000 for the first time in history. Oh my gosh, that's amazing. And it led to the title of this week's NetWorthRadio.com broadcast, which you can get in its entirety. You can go Apple Podcasts, NetWorthRadio.com, and it's commercial free too. But the key was, it reads 34,000, seems like a big number. Everybody says, well, when's the next correction? So the title of the program, When to Expect the Next Unexpected Correction. And the questions below it, if you go, if you look at the YouTube here, I put the questions below it. Well, the questions actually answer it. We start to expect it now and prepare for what we're going to do. And the next 4 questions answer that right below this YouTube video. Now, look at this. This is the Dow. There's your 34,000 headline. Oh my gosh, with distance above the 31,000 that we were right here. That's about 10% higher. Look at this. Boom. We know that's the pandemic. It doesn't take much to figure that out, 18,000. If we go back just 1 year, we were at 24,000. What should have we expected with the shutdown? What should we have been doing at that point? Well, buying great assets would have been a good way to expect the unexpected, which was the fastest recovery in history. And where was that first broadcast? Well, NetWorthRadio.com and here on YouTube, McGowanGroup. We said it should be the fastest recovery in history. Not perfect, nobody gets it exactly right, but that was key advice. Own great assets that pay a lot of cash flow and you'll be just fine when things normalize. Well, with all the stimulus checks, we may be overstimulated. And this is retail and food services. Have you tried to get a reservation in a decent restaurant? Oh my gosh, they're overrun. Louis Vuitton had record sales. There's a line out the door at North Park, by the way. Not that I buy much of that stuff, but Katrina wanted something. And so retail and food services here, we were 619 is the measure. It was 550 before, 412 last year. What does that mean? Retail is with distance above the pandemic, with a lot of distance, about 15% above pandemic levels. The stimulus checks, boom, they went out. That's part of it. In regards to saving the economy and not spending a huge time in a depression or a recession, well, the stimulus worked, and especially the Fed infusing liquidity, which by the way means record low defaults at the current time because so much liquidity was infused. Most people paid their bills and most people have some extra. That's what this number tells you. How fast are the S&P 500 companies going to recover, right? Where the indexes are a record plus 10%, up 40% from this time last year, and up even more, of course, nearly a double from the absolute lows. Well, that's recovering to what those companies are actually worth in a normal market. But what is this? This is the S&P 500 profits per quarter after tax. $40 per S&P unit back here. That was all the way back in the third quarter of 2018. Then it dropped in the pandemic to below 25. We're still not back fully recovered. This quarter, somewhere close, but those are 18 levels. How much is the market over that level, right? Because we're not at record profits yet. Some companies are because they manage the pandemic well. But as a group, the equity indexes appear to be overpriced. And if you go back to 2018, that could be as much as 10 or 20%. A 10 or 20% correction is normal. We start to prepare for that unexpected correction now, so it wouldn't be unexpected, right? Then here, look, this is usually too optimistic, by the way, the Bloomberg estimates here. But in the fourth quarter of 2022, that'd be over $50, close to 55 per unit versus that 40 or something just below 40 here in the most recent measure. So the earnings haven't quite caught up yet, even with where they were in 18. Just pointing that out. If you get a 10% or get a tax increase on corporations, this number drops by 10% under the proposed tax increase from 21 to 28. Well, that might be a 10% correction. So get ready for it now. Stash a little cash. We're harvesting a few things. This is one of the categories. Now, here, this is year to date. That is a long-term treasury in value. That's what happens when the rates go up. The rates spiked through about March 20th, okay? Right in here. And that caused the value of a 20-year treasury to go down as much as 14%. Now it's down about 11 or so. What's this? Oh, that's one of our high yield holdings, and we're starting to harvest great profits. Why? Because it went to a premium. Why? Because money markets are zero, and even treasuries are low yields, and stuff that pays 5, 6, or 7 looks pretty darn good in this market. Some of it already getting overpriced by measures that we look at in the investment committee at McGowanGroup each and every week. Now, here we go. This is the year-to-date sector performance, this colorful graph. Energy is up 30%, so is the energy infrastructure pipelines. That group is leading, wow, the whole market. Banks, when I mentioned record low defaults, the banks put money over here in case people default. They had to take a loss to put more money over there in the pandemic. Not as many people defaulted. Most people paid their bills. Banks are up 20%. This week, the rally in the medical dividend companies, the medical healthcare companies, that rally resumed. It's not up as much as the S&P or the Dow this year, but it had a good week and it's starting to catch up. But the leading sector is energy. That's a key going forward. Why? Look at this. This is how much, these are world liquid fuels production and consumption balance. That could be liquid natural gas, oil, natural gas liquids, derivatives, and refined products. Okay, so the brown line is, well, world consumption. You can see it plummeted. Production went down about 15%. Consumption went down 15% right there. Production went down about 10. And what happens here? This forecast may be, it may be understated, but the key is this blue line above or below the brown line. What does that mean? There would be more consumption than production in the fourth quarter and the first quarter. That's called a shortage. And that's one of the reasons oil rebounded to 63. This time last year, in the first quarter, it actually went to minus 37. First time oil's gone up in 13 months by $100. But anyway, there'll be a shortage based on the EIA figures that just came out here. I'm Spencer McGowan, President, McGowanGroup, and come down to the Crescent and see us or set up your Zoom meeting. We look forward to working with you and implementing strategies for 2021 with an eye towards 25, 30, and beyond. Join us each and every week right here, YouTube McGowanGroup. Be sure to subscribe. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President, McGowanGroup, your financial weatherman. We sponsor each week networthradio.com broadcast. That has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast-breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, the McGowanGroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors, and exactly how our clients have done, disclosed right here. Further disclosures: value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast, and that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast, or any securities, doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.